Hello guys, good day. This is FTS once again. I am not a financial advisor, neither do I give financial advice. This video is for educational purpose only. And as we know, past profits do not guarantee future results. The forex market is volatile. As you take your trades, apply risk management. All right, so tonight I'm doing a training on how to trade gold like a pro, right? I'm focusing on the eight fundamental trading strategies, right? Over the years, many persons have posted various videos on YouTube on how to trade gold, and all I could see from them is just technical analysis, right? So they just hints on technical analysis. They just tell the history about gold. Then the next thing they go to charts. They tell you, okay, buy gold, use different method, ICT, BTMM, demand and supply, support and resistance. You use Bollinger Band, you use RSI, you use stochastic, and you follow trend, right? Yeah, but tonight I'm telling us about the from the aspect of fundamental analysis, right? And as we all know, fundamental analysis is what drives price. It's what determines the market sentiment of the price. It tells us why price is moving in a particular direction, right? On a short term, on a mid term, and on a long term basis, right? So tonight I'm focusing on all of these, right? The eight different strategies that you can use to trade gold, right? If you can understand these eight different strategies, I tell you, you can apply one or two. I tell you, you'll be good. Let me just tell you that this is all you need to know about gold, and how you can trade gold and all of that. So let's dive in, right? Yeah. Now, it says what influences gold and what you should know about gold, right? What you should know about gold. Gold is a commodity, right? Yeah, gold, unlike other financial instrument, is a real asset, and you can be traded as a commodity or as a store of value, right? Yeah, often in the form of gold futures, gold ETF, physical gold, right? Yeah. Then number two, gold is merely traded or paired against the United States dollar, right? Yeah. If you're a trader, like what we have here, we have SAU USD, right? Yeah, we have SAU USD. So this is what you see in most brokers, right? In some broker, you see gold USD. Why most brokers you see SAU USD, which stands for gold USD. So gold is normally traded against the dollar, not any other currency. As a trader, you should understand that the what you see gold paired against is the United States dollar, because United States dollar is the most traded currency in the forex market, and US, I think they are one of the highest. They have the highest reserve for gold, right? Yeah, so that's why they paired the United States dollar against gold. So anywhere you go in the world, if you want to trade gold, right, you want to buy gold whatsoever, it's normally paired traded against the United States. It's normally traded against the United States dollar, right? Now look at this, right? So apart from that, I will telling us about some things about gold that you should know, right? Number two says gold is highly influenced by the DXY, which is what the dollar index, right? The gold is also influenced by geopolitics, right? When I mean geopolitics, I'm talking about pandemic, tariff war, trade war, you know, anything that has to do with global economics, right? And how it affects currency and all of that, right? Yeah, and these geopolitics also influence gold in negative way and also in a positive way. The gold is also influenced by central bank decisions and demand, right? Yeah, so whenever central bank makes some kind of decisions, right? Yeah, it also affects gold, because gold is also part of what they do. The central banks also buy gold. Yeah, they have gold vault. They also reserve gold as well. Yeah, and they also make decisions that will likely affect gold. So if you can know all of this, I tell you, your trading of gold will be very, very accurate. Gold is also influenced by interest rates and what inflation, right? So this is very key, right? I'm going to discuss this later on. Then also, gold is also influenced by key economic events like FOMC, CPI, and NFP, right? Any news event that will likely produce a weaker or stronger dollar, right, is would definitely affect gold. As a trader, you should know this, right? Then the last thing you should never go is that gold is volatile. Please, and let me sound this again. If you know you are a newbie, you should be careful with gold. I tell you, gold can wipe your account in an instant, right? Especially when you're trading it with when you're trading gold during FOMC, CPI, NFP, GDP, right? Yes, and yeah, when you're trading at this and this when we have a high impact news, when you're trading, I tell you, it can wipe your account. And also, if you don't have good account size, please avoid gold, right? You cannot build smaller account with gold, except you want to gamble with your account. That is only when you can trade gold and you've made up your mind you are gambling with your account. So anything that comes out of it, that's your business, right? Then the next slide says um, gold trading strategy. So I'm going to teach us different strategies in which you can trade gold. I tell you, you can apply one or two, and they are fundamentally driven. They are not technically driven. When I mean fundamentally driven, I mean what is making gold to move behind the scene. Like I've always said, I use fundamental analysis to determine my market bias or market direction, right? Or market sentiment. Then I use technical analysis for entry. Like I've always stated in my training and to my trading community, they all know that you know, no technical analysis is stronger than the other. They're all the same, right? The difference is that one, knowing when to use each and every one of them, right? Yeah, I've proved it many times to my students and those material community that all technical analysis are same, right? The difference is that you have to know when to apply them, and all of them are correct. If you can have a good directional bias using fundamental analysis, then you are good, right? So that is what we do in my trading community. I do analysis using fundamentals, then we use technicals for entry. And our entry sometimes they're mainly a lower time frame, like 15 minutes or 5 minutes or 30 minutes, depending on where we have, where it is convenient for us, right? So let's dive into the fundamental strategies. Number one, uh, DSY, inversely correlated with gold, right? Dollar index, right? And as we all know, this DSY, the DSY stands for dollar index. So we use dollar index as to represent dollar itself, right? Yeah, and dollar index is used to measure dollar against the G8 currencies. I'm talking about the GBP, the euro, the CAD, the yen, the kiwi, and the Aussie dollar, right? Yeah, so we use dollar to scale these currencies. And what drives the dollar? It's what I'm going to talk about now, right? So the main thing that drives the dollar, right? So we have interest rate, we have inflation, we have GDP, right? Then we have unemployment stat, right? Then we have existing home sales. Then we have many United States key economic indicators, right? So these are the things that drive the dollar, right? Then we have existing home sales. Existing home sales, you know, controls. It provides data for 60% of United States GDP. So once you can analyze as existing home sales, sorry, retail sales, not existing home sales, retail sales year of year, month of month, or year of year. Once you can analyze retail sales, right? Yeah, I tell you, you can really understand GDP. Then interest rate, right? Whether they're hiking or cutting rate, right? Yeah, any data that produces a stronger or weaker dollar, right? It's what controls the dollar at that particular time, right? So, like I said, we have interest rate, we have GDP, we have unemployment, then we have inflation, right? These are the four key macros, right? Macro data that controls the dollar, right? Then maybe geopolitics whatsoever and the particular time that has to do with trade war, has to do with pandemic, that has to do with war, not only trade war, yeah, anti-war, right? Anything that affects the dollar, it controls the dollar at that particular time, right? And whenever the dollar is strong, right? Gold is weak because gold is inversely correlated with the dollar. That means if the dollar is strong, gold should be weak. And if the dollar is weak, means gold is strong. You understand? Because gold is paired against the dollar, right? Gold is paired against the dollar. So let me take us to TradingView and show us something, right? To confirm the negatively correlation, or you can call it negative correlation or inversely correlated, right? That means they go in different direction. I've always told my students the only time gold and dollar goes in the same direction is during uncertainty. Sorry, it's not sorry, it's not correct. Let me take this out first. During uncertainty. Let me use this here. During uncertainty. That is when gold and dollar go in the same direction. When we have during a risk of market sentiment, right? During pandemic, during war, and all of that, because gold is safe haven commodity, dollar itself is a safe haven currency. So at that particular time, both of them can go in the same direction. But apart from that, gold and dollar they are negatively correlated. Now look at this chart. You can see at this point that gold was selling, the dollar was buying. Now God is trying to sell, for instance, dollar is trying to sell, gold is buying now. Now this is gold. What I did was that I laid gold on the dollar so you can see that they're opposite. Most of the time you see the chart opposite, right? Look at this one. Here it's on on this level. Look at here it's down, right? You can see that they are look at this. They are always negatively correlated. They don't go in the same direction except on like what I've said on when we have during risk of market sentiment or risk of period, right? Yeah. When we have uncertainty, that is when they go in the same direction. Like COVID-19 period, and this trade war, there was a time, it happened and it started going the same direction, right? So you always see something like that, right? But mainly they are what? Negatively correlated or inversely correlated. That means they don't go in the same direction. So if you can analyze your dollar index very well, I tell you, you succeeded in analyzing your good. And what drives the dollar, like I talked about, right, after I talked about interest rate, inflation, GDP, unemployment, right? Then some key economic indicators, right? United States key economic indicators that will determine the market sentiment at that particular time, right? And if the dollar is buying, gold should sell. So this is how you can see that the dollar and gold are negatively correlated, right? So let's head back to our presentation for the next one, right? Now, the next one is interest rate, right? So interest rate is a very strong economic indicator that is used to analyze the dollar, and also, you know, that is used to analyze gold as well, right? So whenever interest rate is hiked, right, we get a weaker gold. And what does rate hike mean? Rate hike means when they are trying to increase, the interest rate, right? Yeah. For instance, as we all know, let me lay this foundation first, right? Inflation, right? Inflation is sorry, they use interest rate to correct inflation. Let me just say it, right? Interest rate is used to correct inflation. Whenever inflation is high, right? Interest rate is used to what? Correct inflation. Let me say the inflation of a particular economy is like 3.5 or 4%, right? What they do is that they keep hiking interest rate. The central bank president or governor, right? We keep hiking interest rate. And what does rate hike mean? Rate hike means they would like to increase interest rate so that foreign investors might find that economy attractive, so that they keep investing in that economy. Because if the rate of the interest rate of an economy is high, I tell you, it attracts foreign investors. So that is what they use. And with time, you know after they've accumulated more foreign investors, right, then they will start cutting the rate, right. So a rate hike for the United States economy it means what? A stronger dollar. So whenever the hiking rate, it means what? The dollar will become strong. And like I said, whenever we have a stronger dollar, right, we should have weak gold, right? So whenever we have a stronger dollar, we should have weak gold. And whenever we have a weaker dollar, we should have a strong gold, right? So rate cut means, for instance, the 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 inflation has started coming down, right? Let me say the inflation has started coming down from 4.5, because after the hiking cycle has ended, then the cutting cycle will begin. Cutting cycle means this the central bank governor or the president of the central bank will start, cutting rate. That means they'll lower the rate from let me say 4% in the first year after the hiking cycle has ended. They will take it to for 3.5%. They will lower it by 25 basis point or 50 basis point as the case may be, right? Based on the statistics they've collected so far. I'm just trying to analyze for us so that we understand the rationale behind the dollar rate hike and gold, right? Yeah. So then when they start cutting rates, it means what? But by cutting interest rate, it meaning that the dollar will not be that attractive anymore, right? Investors will not troop in to buy gold because the interest rate they will get at the end of the year will be reduced. Instead of them to, have loss at the end of the day, then they pour in the money into gold. That means rate cut means what? A weaker dollar. White rate hike means what? A stronger dollar. Right. So whenever the dollar is strong, gold is weak. And whenever the dollar is weak, gold is strong. That is what I'm trying to say. So from here it says when rate rise, gold tends to fall. That's what this is. That when the hiking rate goes tend to fall. And whenever rate falls, gold will or expected to fall, gold tends to rise. That is the interpretation, right? So in interest rate, whenever you hear, okay, that a particular the United States economy right now they're trying to cut rate, right? Yeah, Trump is forcing Powell to cut rate. I think next tomorrow, Thursday, tomorrow is FOMC, and as we all know, they will likely no cut rate. So they will likely cut rate in the last quarter, I think September and December, right, by 25 basis point each. All right, that means before the year runs out, the United States will likely uh cut rate by 50 basis point. It's presently 4.5. That means by the end of the year, their interest rate should be let me say 4%, right? Yeah. Let me see if I can show us this. Let me see if I can show us this. Sorry. Okay, look at the interest rate of the United States. Currently it is 4.5%, right? Yeah, you can see that they're still on their cutting cycle, right? So they started cutting last year, right? Yeah, started cutting last year, and from 5.5% to 5%. They removed the 5 basis points to 4.5%, and Trump is asking Powell to cut rates, right? So by the end of the year, they might likely cut it by 50 basis points to which will now become 4%, right? And as they cut, and what is it behind the cutting rate? Because of the inflation figure, right? Yeah, inflation figure is the reason behind rate cut. So if the inflation figure is low, that means they will keep cutting rate, right? So that is the driver of the interest rate. So whenever there's rate hike, we are expected to see a stronger dollar, weaker gold. Whenever there's a rate cut, right, we're expected to see a weaker dollar and a stronger gold. Now the next one is gold acting as what? A safe haven asset. Gold are acting as what? A safe haven asset. Like I've said before, we have safe haven asset and safe haven currency and safe haven commodity, right? So gold is a commodity. So gold act as safe haven asset. What does that mean? It means in a time of uncertainties, right? In time of uncertainty like war, financial crisis, pandemic, right? During risk off period, right? When I mean risk off, when people are afraid to invest. Like for instance, like COVID-19. If you understood what happened during COVID-19, you know that there was lockdown and businesses died and people were afraid to do investment at that particular time. So what they do is that they buy into safe haven currency and safe haven commodities so that at least they can safeguard their capital. Whenever it is favorable for them to trade again, then they can now start investing, right? So in the time of uncertainty, right? In time of uncertainty, they invest in a safe haven asset, right? Like gold and US safe haven currency, JPY, CHF, right? Yeah, these are the three safe haven currencies. Then safe haven commodity we have gold. So at that particular time when we during geopolitical crisis and all of that, right? Gold tend to rise, right? So whenever we have geopolitical crisis, is an opportunity for you to buy gold at that particular time, is a clear opportunity for you to buy gold, right? So, for instance, this US-China trade war that just happened recently, right? Gold started pumping crazily, because at that particular time, people are afraid of whether to invest on the United States dollar, or to invest on Chinese economy and the rest, right? So, because of this uncertainty, investors were just watching from the side, so they started buying gold instead of them to lose their money to lose value in the United States dollar, right? They started buying gold. So if you look at that particular, if you look at that period, you see that gold started coming down, right? Gold started going up while the dollar started coming down. So that's one thing you should understand about the market, right? Because these are the things that drive these are the things that drive gold, right? Yeah. So whenever the dollar is coming down, gold should go up, right? I have this understanding about the market. I tell you, you will not miss out, right? You know what to trade at a particular time, right? If you have this understanding. So I normally use this to tell us something, right? That became president. Trump became president in January 23rd, right? January 23rd, and immediately became president. United States dollar started crashing because of his policies. That's one thing, right? That's it. As the United States dollar was crashing, this is January 13th, right? After look at this, look at when he became president. They sworn him in on the 20th. Then on 23rd, he started giving policies and all of that, right? Implementing a lot of things, right? And that was it. So from here, the dollar started crashing and gold was just going up, right? From this point, right? Because of his policies. And if you look at dollar index, right, you can see, look at this point here. Look at this point, right? The dollar has been on downtrend because of his policies, right? Yeah. So you can see the impact on the dollar. And as the dollar is going down, gold is what? Going up, right? Yeah. I think I should post it. I should add it again. Gold, so you can see, right? You can see that they are going the same direction, right? You can see from here. Look at from here, right? Gold is going up, dollar is coming down. So you can see the impact of that, right? The impact it had on that. Now, the next strategy is treasury yield, right? Yeah, treasury yield, right? So the United States bond market is a clear example, on how you can also trade gold, right? Yeah, so whenever the United States bond market is strong, right, we expect dollar to be weak, because a stronger bond market connotes a stronger dollar, right? If you look at US 30, uh, you look at US 30, you look at a Nasdaq 100, you look at S&P 500, right? And every other, commodity in the market, right? So they classify them as well United States bond, right? Yeah. So they're different bond and they different bond, but what the standard they use is the 10 years bond yield, right? Yes, 10 years United States bond yield. So whenever we have a stronger dollar, what it tells us that United States bond market will be strong. Whenever we have a weaker bond market, means what the dollar is weak. So dollar and bond market, they are the same, as in terms of analysis, right? But they're not the same this on the chart, right? But they are the same terms of analysis. A stronger United States bond market connotes a stronger United States dollar. I think I should take this off and try and show us what I'm trying to say, right? So let me say it's normally called US US 10 years. Yeah, US 10 years. So this is it, right? So this is it. This is the This is the bond market, right? So this is the United States bond market. Then, let me add the DSY dollar index to it. You see, right? Most of the time they are positively correlated. You can see, right? Look at both of them going down. Look at both of them going up. Look at both of them coming down. And it was only here that there's a disparity here. You can see. So whenever the bond market is coming down, dollar is coming down. Whenever the bond market is going up, dollar is going up. Whenever it's coming down, dollar is also coming down. So they are positively correlated. A stronger bond market connotes what is stronger United States dollar, and a weaker bond market connotes a weaker United States dollar. And whenever United States dollar is strong, gold should be weak because they are negatively correlated. And whenever the United States dollar is weak, gold should be strong. The only time they both of them can be strong together it is during when they act as safe haven currency or safe haven commodity. So whenever you have a stronger dollar or you have a stronger bond market, expect a weaker gold, right? If you have a weaker bond market or a weaker dollar, expect a stronger gold. That is the point I'm trying to make, right? That's the point I'm trying to make. So you can see, as you stated here already, said treasury yield like just a minute. Represent okay, treasury yield okay, represent the cost of holding gold, right? So when yield rises, investors prefer safe and interest-bearing bond over gold, right? So whenever there's yield, right? The thing is that gold just as to them, gold is just like it terms of risk of asset, right? So whenever the environment is the economy favorable, they invest their money on the bond market because they will have yield percentage at the end of the year. They will have percentage at the end of the year, right? So they invest their money on bond market. So whenever there's uncertainty and there is tension in the market, they rush to gold, right? So you can see when it falls, right? Especially read adjusted for inflation, gold becomes more price, and that means what appealing, right? That means gold is definitely right. So, like I've always said, we use the bond market to analyze gold, right? So, a stronger bond market connotes a stronger dollar, which will likely give us a weaker gold. Then, a weaker bond market, meaning a weaker dollar and gold will be strong, right? So these are some of the strategies you use to analyze gold. So what you can put one or two together, tell you your gold will definitely go well, right? Without using, then you can use technical analysis. So whatever technical analysis you know how to trade with, please stick to it, right? I'm not trying to tell you, okay, come and learn my technical analysis. No, what I'm basically doing is that I'm trying to tell you that fundamental analysis is what drives the market, whether gold, currency, and every other commodity in the market. Fundamental analysis is what drives the market, and we have four key economic indicators that are used to scale, and some other economic indicator, but they're basically for. But if you can analyze those for very well in line with what you're doing, I tell you, you will win most of your trades. Then the next one is what inflation, right? Inflation. Now this is very tricky anyway, but I think I'll try my best to explain this to us so that we can understand it, right? If you note here, it is stated inflation fears. Understand this place. It stated inflation fears, not only inflation, but what inflation fear. Now the fear of your known, okay, that inflation is getting higher. So that's what it is. If inflation is getting higher, that means what? People would like to start buying gold. They'll start buying gold, right? Because they know that, or they hear that Feds are trying to hike rates in the next meeting, right? They are trying to hike rates. So because of that fear, they start buying gold. And they saw that the interest rate is the inflation is high. They start buying gold because they don't want to lose their money. So gold is a hedge against inflation. It's said, like I've said, is a hedge against inflation. When investors expect inflation to rise, they buy gold to preserve the value of their money. You can see why? Because gold is a real asset. It retains intrinsic value even as what currencies lose purchasing power. During inflation, currencies might lose purchasing power. What you bought with $5 today, because of inflation, you will get it for you you can get it for $3. You know, you can get it less. That's what I'm trying to say. You can get it less because of high inflation, right? Yeah, or you can get it less, right? So that's what inflation does, right? Inflation, because of inflation, what what is what? $5 today might be worth something less, right, in the nearest future. That's the impact of inflation, right? So inflation is not good, right? So that's why they use interest rate to correct inflation. As inflation is going up, they keep hiking rate, right? So at this stage, gold tend to rise even before central bank will take any action because of the fear of inflation. They start buying gold, right? Yeah, they start buying gold. But nevertheless, gold and dollar, they don't go in the same direction because when inflation is getting higher, right? Interest rate in the next rate meeting, that is when the central bank governor, the president, or the Feds will likely announce, okay, we want to hike rate because immediately they hike rate, right? Dollar will start going up. And if dollar goes up, gold will fall. So my point of emphasis here is what the inflation fear, because of the fear of inflation, people want to invest on gold just to hold their capital because deflation has blown out of proportion. So because of the fear of losing the value, intrinsic value of their of their uh, of their currency note, they convert it to gold. That is what I'm trying to drive at. So whenever we're having high inflation, go to rise, go to buy, right? That is what I'm trying to tell you. That is the essence of this. Next one, central bank buy gold, right? Yeah, so this is very, very important. Every central bank buy gold, especially China, Russia, and Turkey. I think I have one of the or something to show us from here from Bloomberg, right? Just a minute. Now, this is 7th of July 2025. People's Bank of China keep buying gold as reserve grow for 8 months. You can see that every month they keep buying gold. Now, there's something in China they do. They have instead of having ATM machines, they have gold machines. If you put in your gold, it weighs it, then it converts that gold to cash for you to use. So people buy gold on the street of China. China is trying, China is part of the BRICS country group, right? So they want, they're trying to accumulate more gold because the BRICS currency will be used, gold will be used as a standard, right? As a benchmark for measuring the BRICS currency. So they're trying to accumulate gold. You understand? So they're trying to accumulate gold for the nearest future. So China keeps buying gold every month. India as well. They also buy gold, right? So like United States, I think one of the highest gold reserve in the world, right? So one of the strength of every central bank is like their gold reserve, right? So the more they buy gold, right? So whenever you see news like this that, for instance, gold is being bought this month by China, right? Look, just know that that month, that period, gold should rally. You understand? Right? News like this, they tend to drive gold they try to drive gold stronger. All right. So if you hear news that okay, People's Bank of China, right? They bought gold, or the Russia, they're buying gold, or Turkey, they're buying gold. Know that because there's a high demand for gold. A high demand for gold drive the price of gold higher. That's what I'm trying to say. There's a high demand for gold, so it drives the price of gold higher. If you look at everything I've said here, I've said fundamentally. I've not even, tried to talk about technical because see, technical is just an aftermath of what has happened in the fundamental analysis world. Then technical analysis is just a chart representative of what has happened in fundamental analysis. So you can see central bank like China, Russia, Turkey buys gold to boost demand. So these purchases are often reported monthly or quarterly and can push price higher if what sustained. So if they do this consistently, you can see that the price of gold will keep high, will keep rising, rally because the demand for gold has increased. You understand? So that is the so if you can keep the record of this, right, you can confidently buy gold at this particular at from time to time. That's what it is. Now we're almost done. Just two more strategies more. This is the number seventh one, right? But then the number seven one says seasonality and and demand pattern. What this place try to tell us is that gold demand increase during specific season in India and China, because India and China are the world. This they consume gold a lot, right? For in India they use them during their weddings, right? And their weddings normally comes up, I think, during the fourth quarter, towards the end of the year, right? Yeah, towards the end of the year. Why Chinese? Their Chinese New Year is normally uh I think January, February, that period, right? So that is when you see that these countries they buy gold a lot, right? So look at Chinese and Indians jewelry consumption statistics, especially gold, right? Look at them, the demand for them in tons, right? You can see, right? So you can see the charts and all of that, right? So this just a pictorial stuff, right? I don't really understand what it is right here, but I know that during the first quarter and the last quarter of the year, I tell you, these are the period there's a high demand for gold in Asia, especially in India and in China, right? So if you can, so during this, so when we approach the last quarter of the year, and you see that your charts, you get information from Bloomberg, from Reuters, from Yahoo Finance and all of that, right? From investing.com, and they keep telling you how China and India are buying gold. Just know that the price of gold will definitely soar at a particular time, right? And these are fundamental reasons why you should buy gold or sell gold at a particular time, right? Right. So when you have this analysis, you just go to your chart, you look for the nearest support and resistance, you look for then you can plot, then you can do analysis, right? Using each 4 hours time frame, then you enter for 15 minutes time frame in the direction of that fundamental analysis. That is how I do my analysis. That is how I trade my market, right? So I don't really focus on technical trend and all of that. I don't do that. I trade fundamental trend because that's the true trend of the market. Lastly, this is very interesting. How to trade gold on FOMC, NFP, CPI, on CPI days, right? That is high impact news. This is very important because I know most of us, they told us that, okay, if you are trading in high impact news, you stay up the market, right? That was before. As for me and my team, we don't stay up the market, right? We try to analyze the market, right? So there is pre-news analysis, there is post-news analysis, right? Yes. Then there is the long-term analysis of what that news will likely how it will likely affect the market, right? So in terms of post-news analysis means after the news has been released, right? If it is normally based on market expectations, if it is below market expectations or it's above market expectations. So let me just show us what I mean by market expectations with I think today's news. Let me take us here. Oh, my child is loading like this. Sorry, just bear with me. All right, this was yesterday, right? Yeah, the job listing and consumers confidence, right? So now market expectation means what the institutions expect the market to do, right? So if what really came, if the actual is greater than institutional point of view, institutional point of view is the focus. If what actually came out is higher than what institutions are seeing, is normally above market expectations. That means that particular time the currency should rally, right? If it's below market expectations, that means if forecast is higher than actual, that means it is below market expectations. So it's all based on market expectations, right? Now let me head back to the presentation. Now, like I said, we use dollar to scale gold, right? Yeah, dollar index, right? So, and we use, and dollar is being paired to gold, right? So FOMC is the interest rate decision for the United States. It is called FOMC, Federal Open Market Committee, right? So it is called FOMC meeting, or you can call it interest rate for other countries, right? Interest rate decision meeting. But for the United States, it's called FOMC, right? And It happens every quarter, it happens every quarter, right? Yeah, every quarter, once every quarter. I think once every quarter is not NFP. I'm talking about FOMC. Once every quarter, right? Yes, it happens once every quarter. And the one for this quarter is going to happen on Wednesday. That is, sorry, Wednesday is today. I think we're better on Wednesday. Just a minute. Let me show us. Let me say today. You see. Look at it. FOMC, or you can call it Fed decision meeting, right? Yeah, or the FOMC, the FOMC today, right? And as you can see, they're likely not going to cut rate. We've analyzed this over and over again, right? And they're likely not going to cut rate, right? Because what will really drive the market this week is not FOMC, it's NFP and GDP, right? NFP and GDP. Yeah, this GDP, yeah, second quarter GDP. This is what will really drive the market to this week, not NFP, right? So not FOMC. So let us head back. All right. Sorry, the class is long because this eight points, I want to really explain them very well so you can understand how to trade gold very well. Right. So hawkish means they will likely hike interest rates. Whenever you see it, when it is hawkish, right, means they will likely hike interest rate, right? And a hawkish output means what? It is above market expectation. That means that they are likely going to hike rate, right? That means it produces a strong dollar. Whenever a dollar is strong, it means what? The gold is normally weak. So gold will fall. If it's hawkish, means what? They will likely hike rate. Well, that's what it means. And whenever the hiking rate means what? It produces stronger dollar, and gold will be weak. Understand it now, right? That means if what comes out is, let me say, for instance, now it is 4.5. If what comes out is 4.7, that means what? The dollar will be weak and gold will be strong. That means at that particular time or the next future or in a short term, right? You cannot buy gold. You sell gold USD. That's what it is. Then if what comes out, let me say for instance, they want to cut rate, which is means what? Dovish. Dovish means what? They are cutting rate, right? That means they're going to lower interest rate, which will increase the demand for gold because a lower interest rate meaning the dollar will be devalued, right? Because the inflation is under control, so they'll likely lower interest rate, and that will that will result to a weaker dollar, and gold will be strong at a particular time. Now for NFP, right? A stronger job report because if it has to do with non-farm payroll, the non-farm population in the United States, right? Yeah, the job data report and all of that. So there are many data that comprises the NFP, right? Yeah. It's not a particular report, right? Yeah, the initial jobless claim, the job listing, they're the retail sales and all of that. So many things, they used to analyze the NFP, right? So a stronger job report means what? A stronger dollar. If you watch very well, I'm using dollar to analyze gold from here now. Watch. A stronger NFP means a stronger dollar. Look at this place. Strong employment data signals economic strength, which may lead to a higher interest rate and what? Strengthened dollar. Anything that has to do with United States dollar that is strong, gold will be weak. Anything that has to do with a weaker United States dollar, gold will be strong. Just understand what I'm trying to say. Right then, a weaker job report means what? Weaker job reports suggest a slowing economy, potentially leading to more dovish Feds and weaker dollar, which will mean what? Gold should what? Should fall. So these are the things that drives the market. You understand? So, the analysis we did last week, and when NFP, right, when NFP happened, right, yeah, we saw that 147,000 jobs were added to the United States economy, and dollar rallied and gold crashed. Gold fell massively. Gold fell at that particular time. Gold fell and dollar rallied. Sorry, let me show us. I'll just show something. I want to be practical here, right? Yeah. It happened here. This is come in, let me see. Not here, okay. Let me see the date happen. Mm, mm, mm. Okay, look at it. July. Yeah, that's it. Yeah, I remember this place also well. Look at it. It is July, right? Yes, July 1st, NFP day. Okay, I think it was Friday, yeah, something like that. Yeah, at this point, gold rallied, dollar rallied from here. So if you match it with gold, you would definitely see, gold fell at that point, right? Got it. Gold fell at that point from here. Gold crashed and started coming down, right? Yeah, so that is what I was trying to tell us. Then lastly, CPI inflation. Now, whenever we have a higher CPI number, it's a negative one against gold, against dollar. If you have, because gold is often bought as a hedge against inflation, especially when CPI high inflation pressures, right? Now look at this place now. They're not talking about the figures here, they're talking about pressures here. In terms of this now look at this. Lower inflation typically signal a stronger dollar. Yes. This is what most people will not understand. Only us that trade fundamental, we know. We know. We know this so much. So, like I said, it's based on market expectations. What if it's below market expectations? It means it's strong, a weaker dollar. It's above market expectation, a stronger dollar. So, lower inflation typically signal a stronger dollar and a higher yield, making gold less appealing. Right? This place is technical, you might not understand it, but this is how it is. Like I said, everything is based on market expectations on that particular day. Everything based on market expectations. So whenever I see a higher CPI figure, right, I know what to do because I look at it based on market expectations. We buy or we sell. If it's below market expectation, we sell. If it's above market expectation, we buy. And I've already told us what market expectation is, right? So these are the 8 strategies we use to trade gold. Number 1, dollar index. Number 2, interest rate. Number 3, safe haven. Number 4, as inflation. Then bond yield. Number 5 and number 6 as seasonality. Number 7, seasonality demand and buying. Then number 7 are central banks that buy gold. Then number 8, how to trade gold using FOMC, NFP, and CPI. I believe with this you have understood this, right? Now, let me say something. Now the thing is that all I've done is that I've tried to tell us about the directional bias of gold, right? I did not tell us about the technical because I know when it comes to technical, we all know what to do, right? Yeah, we all know what to do about technical analysis. So I'm not I'm not talking about technical, I'm talking about uh fundamental analysis. Like I trade, right? Like what I trade, right? I use technical analysis for entry after I've determined my market bias using fundamental analysis, right? Yeah, like I said, no technical analysis is a waste. They are all correct and they are all good. So it's all a matter of choice, right? So sometimes I use this normal TradingView chart, and some other time I use BTMM, right? Yeah, I use BTMM and this BTMM plus ICT. So this is my signature strategy then, right? Yeah, until after some time I started using fundamental analysis with my team, right? Then we use fundamental analysis to determine the market bias. Then we use H4 and M15 here to scale it. Then we buy or we sell in line with fundamental bias, right? Like I said, no analysis is what is a waste. Get it rightly. No fundamental analysis is weak. They are all strong. Sorry, no technical analysis is weak. They are all strong. So anyone that fits your style at that particular time, that is what you use, right? I've always said this and I'll say it again, right? No tech analysis is a waste. They are all the same, but the usage and the timing is what makes the difference, right? Usage and the timing is what makes the difference, right? So that is it for me tonight, right? For me tonight, like I said, if you determine your market buyer, then you can enter using M15, right? You can using M15. Now, I posted this analysis in my trading community today, right? And I expected the DSY to get here. If dollar get here, then we'll start selling the dollar, right? Yeah, and dollar did not get there, and she's trying to get here. I posted it when price was here. I think from tomorrow, that's where the market will receive more volatility. From today being Wednesday, that's where the market will receive more volatility. Just let's see what will happen in today's market, right? So I think that's it for me. If you have not liked, if you have not liked and subscribed to my channel, you can like, subscribe, and put on the notification bell. Then you can also comment in case you have any question. So from me to you, thank you for being part of this, right? And also invite other people to like my channel and be part of my channel. All right. Thank you and have a lovely evening.